What's up, traders? This is Vee Trades, and today I will be doing a technical analysis breakdown for Redfin Corporation with the ticker symbol RDFN. This was a viewer's request, and thank you for your donation. I will first be going over what I see on the daily chart and finish the video off with the weekly chart. So last time I looked at Redfin was back in June 6th. So let's take a look at when was that. It was right about here, and you see that that's when price was near the top side of this yellow range and slowly traveled to the other side. But in this case, price made a higher low, which means it cannot get to the same level as the previous low. So this low right here is higher than the previous one. So that shows a little bit of sign of strength. Price traveled to the upper side of the range, tried to break out of that low $7 level, failed, immediately sold off after that, and now price looks like it's trying to trend down lower. So we do have somewhat of a bullish trend line in play right now, and then we do have somewhat of a bearish trend line in play, with both of them having small breakouts on both sides. So we had a breakout right here, a small one for the bulls, and a breakout right here for the bears. So overall, just still trading within this sideways trading range. We did see two legs up, so this is all one leg right here, and generally market moves in two, so this was the second leg right here, and price reached and exceeded. After two legs, we expect a continuation of the prior impulse. So we had one leg right here with two legs up. So let me go and clone this. That can mark the center of the pattern for another large leg down. So this is the start of the second leg, and that's targeting right around the $4.96 level. So I think there's a good chance of seeing more downside, even though we do have this bullish trend line in play. A lot of times, these trend lines, they just kind of get in the way, especially when price is just mostly trading sideways. But with getting rejected from the upper side of the range after getting two legs up, there's a good shot for seeing another leg down. So expectation is, since we hit the highs of the range, we go down to the lows. That's around the 591 and possibly even break out to reach the 490. Let's say none of that occurs. What can occur from here then? Well, we can see another leg up higher. This is all one leg right here. This is the second leg. And the reason I'm not that bullish is because we already saw two attempts to reach this leg right here at the 933. So you see that the bulls tried two attempts to reach it. So this was the first attempt by the bulls that failed. This was the second attempt that failed. Sometimes you can see a smaller push up higher, maybe a lower high, something like this. Another final push up, but it eventually just becomes a lower high, lower than the previous highs, and then price just sells off, something like that. So you see this is a lower high, and then a possible another lower high, and then another sell off. So even if we do see a push up higher, I don't think there's a good shot of breaking out higher to the 933. So as right now, my opinion, I believe we're going to be heading down lower due to being rejected from the upper side of the range just a few days ago. And after reaching two legs up, which marks the center of the pattern in most cases for another leg down. Another leg down is targeting the high fours, low fives. And we'll see what happens. But as right now, it's not looking that bullish. In my opinion, it looks more bearish than bullish. But we are mostly trading sideways. So that's something to keep in mind as well. So that's all I see on the daily chart. Let's take a look at the weekly chart, see what else we can find. But also good to mention that price is kind of somewhat following this downward trend line as well too. So take a look at the weekly chart. What do I see on the weekly chart? You see that we've just been chopping back and forth for the past couple of months now, since basically February. We're at the same price level as February, late February. So not much has changed overall, just a very tight range. There is a downward bias to this with a slight upward bias, but this downward bias might be stronger than that upward bias to break down that price lower. So you see that we are making severe lower highs, lower high here, lower high, but higher lows. But the higher lows aren't that much higher than the previous one. But the lower highs are definitely a bigger difference than the previous one. So there's a stronger downward bias than an upward bias. We are consolidating. Traders are just trying to figure out what to do. They're trying to go short, they're trying to go long, so they're looking at both sides of the story, and even sometimes the third side, which is not doing anything at all, which is being neutral, just like a coin. Most people think there's two sides to a coin, but technically there's three sides. There's the obverse, which is the front, the reverse, which is the back, and then the side or the edge of the coin. So there's three sides to a coin, three sides to the market: a bullish, a bearish, and a neutral side. So you have to look at all sides, see what traders are going to do. Most of them aren't going to do anything right now. It's a little bearish, but if I were to predict what can occur in the future, which has a higher likelihood of occurring, most likely see that leg down lower and then continuation to the downside. So again, we do have measurement targets in play to the downside, measurement targets in play to the upside. That's why we're seeing this consolidation pattern occur. Traders are just not sure, but what I just saw for the past couple of days, I think there's a good shot of seeing the breakdown lower towards the low fives, high fours, and possibly even continuation lower from there. So we'll see what happens to Redfin. That's all I have on the daily, weekly charts. And this is Vee Trades, and thank you for your time.